You guys doing all right? Feeling good? Following rules? Making money? All those fun things that we do. That's what we're going to talk about today, guys. We're going to talk about rules. We're going to talk about advantages. Um, got some new names in the room. I'm excited about that. Um, Morgan, I'm always afraid to click on your links. Oh, the cat jamming. I like it. It's small, but I dig it. In the skeleton dance. I've seen that one. Yeah, they come up as links. If I try to open them, they come in as little itty bitty links. So it's a weird thing. Um, I'm Mark. Welcome to the room. Who are my new folks today? I see a lot of new names in here, guys. Sometimes you're new. Sometimes you've just been on a little hiatus and you've come back. Man, I love the new people. Love it when the new people come in. Like when the old people keep showing up too. But guys, this class is designed, especially in the first hour, to help you learn how to read your indicators. This class is designed 100% to go from zero forward. I don't assume anybody in this room knows anything. I don't assume an understanding of what a trigger is or anything like that. Hopefully you've done a little homework, but if you haven't, you're still going to be just fine. Um, this classroom is very much sequential. I'm going to take you from the ground floor and just going to work our way up, and we're going to talk about a couple different things today. But before I do anything, each and every day I go to forexfactory.com/calendar, and I make sure that I know when impactful news releases are coming out. Today is Friday, June 21st, and at 9:45 a.m., guys, there's Flash Manufacturing PMI and Flash Services PMI. Right behind it at 10 a.m., there's existing home sales. There's two things that I use news for, and it is never to make trading decisions. Everything that I teach in this room, everything that I do in my own personal trading, revolves around advantages that come from patterns that repeat themselves. News is not a pattern. News is a catalyst for emotional reaction. There are people that trade the news. So if Flash Manufacturing PMI is a positive, somebody has a predetermined reaction, and that's what they're going to do. And the reality is these news releases can really make the market spike or change direction or just get so fast that it's untradeable. So anytime I see these news releases, I sit on my hands and I wait, because there are no advantages in jumping in front of somebody's emotional roller coaster. Everything that I talk about every day, and I mean every day, guys, comes from the Nexgen page. It comes right from the education tab, straight from the trading guide. I go to great lengths to give you guys anything and everything that you need to be successful with the software. If you're on demo, you got a working copy of the software. You got a platform to run it on. I'm going to give you rules for the highest probability trend trade that you could ever take. I'm going to give you a written plan that you can follow. And I'm going to teach you how to study this. The only thing that I cannot provide new users is repetition. That's the only thing. I can't give you experience. Everything else you need to be successful, you will get before this day is over. But I want to remind new users, because you guys are shy and you don't like to say anything. You just like to sit in the background going, man, I just don't have any idea what he's talking about. Day one is like drinking from a fire hose, guys. Day one is you trying to be an expert in the first 24 hours with the software. Don't put that pressure on yourself. Take little sips. I'm going to break down each rule individually. I'm going to give you pictures of what it looks like to have them met. I'm going to teach you to study it. The easier that you allow this to be, if you focus on the process rather than the results initially, you're going to get the results that you desire more often than not. So I'm going to go to the glossary of common terms. This is great if you're brand new and you're just kind of working your way into the lingo. But the most important one to me for this classroom, and the one that I talk about every day for the first hour is kind of like a lecture. We're going to talk about a high probability trend trade. We're going to talk about a trade that typically wins 70 to 80% of the time. This is a trade that creates confidence through the memory of success, but the most important thing that this high probability trend trade does, this trade, when each indicator on every chart agrees for the rules, when triggers are the strongest, when no termination conditions exist, guys, this is the trade that gives you the most valuable skill that you can have if you want to be a day trader. It turns you into a chart reader. Because 90% of your day is reading indicators. 90% of your day is doing absolutely nothing while you wait for your advantages to show up. 90% of your day is sitting on your hands, playing a game on your phone, reading a book, whatever it is, other than trading when your rules aren't met. 10% of your day will be the busy time when you have the advantages that you need to pull the trigger, to get into those trades, guys. And once you focus on your chart reading, once you make that a priority over the results of your trading, when you make the process, good morning, John Novak, you're going to be able to look at your charts and understand almost instantly where the market is likely to continue. And we're going to use this initially for the high probability trend trade entry. You will understand where the market is likely to go, and this is going to help you set targets where they belong. And then you're also going to understand where the market is likely to stop. This is such a key part of chart reading, excuse me, because likely to stop will not only keep you from trading into areas that may reverse the market, but when those areas do reverse the market, you're going to use that as an anchor, and that anchor is going to set you up for the highest probability, most consistent trade that you can take. Good morning, Dwight. So even in the user guide here, it says for your first 30 days and beyond, consistent winning trades, focus on quality over quantity for the first 30 days. Don't try to be in every move. Figure out how to be in the best moves. And when the market reverses from a key area and sets up that high probability trend trade, guys, that's the money. That is the highest probability trend trade that you can take. And that's what we're going to talk about for the first hour, guys. And we're going to keep it simple. High probability trend trades it's only 3 rules. That's it. You are going to have this little voice in the back of your head saying there has to be more. There has to be more to a trade that wins more than it loses. There has to be more to a trade that teaches me to read my indicators. But there's not, guys. It's 3 very simple rules that provide 3 advantages. Your job is to learn to speak to yourself in terms of advantages. Like scare the dog in the room. Talk out loud about momentum, a clear path in an entry area, because that is the recipe for a trade. These 3 rules are going to happen on only 2 charts. And we do this, again, for simplicity. Let me show you a little bit. So the large chart is the large crowd. The large chart are the people that move the market, that create these trends, that establish momentum. The large chart is where the people react to these key areas that you're going to know about. And then the small chart is a representation of a small crowd. People that still have a lot of money, they can create little fights within the market, but they lose their fights 70 to 80% of the time. We're going to use that smaller chart to capitalize on the fights they create so that we can go with everything that the large crowd wants to have happen. So on one bar, the most current bar on your large chart, you will be able to define the direction of the market. You will be able to understand whether or not you have the advantage of momentum through rule number 1. And you'll also understand if there's an area present that you shouldn't be trading into through rule number 2. Once you have your first 2 rules met on the large chart, you're going to turn your attention to a smaller, faster chart. This is where we take the guts of that one bar. We do an X-ray, and your smaller chart is a faster chart. It's going to refine it into probably 20 to 30 bars, and it's going to allow you to take advantage of that small crowd fight, and you'll pinpoint exactly where their fight is likely to lose, and this becomes your entry for the highest probability trend trade. This is the one that allows you to reduce your risk, that gives you the ability to maximize your profit potential. And we do this on only 2 charts, and we do it with only 3 rules. And guys, there's a very simple path to getting to where you want to be ASAP. And everything begins with taking pictures. Everything begins with taking pictures of what you see on the chart, taking pictures, asking questions, and posting them in the room. The more pictures that you take and post in the room, the quicker you're going to get to where you want to be, guys. It's a very proven recipe. We're going to learn the rules. We're going to learn the trigger line rules for when it's okay to trade. I'm going to go through all three of them. We're going to look at them visually. We're going to talk about what they mean to you. Excuse me. You guys simulate, practice, get out there, practice the rules, break some rules if you need to. Because when you break rules, you learn how to not break rules long term. But make sure that you're posting them in the room. Every time you post in the room, you're getting a private session with me. So, Teddy, if you drop a trade in the room, we're going to talk about those advantages. We're going to talk about momentum, and we're going to talk about a clear path, and we're going to discuss the entry area. And if there is anything that can be done to improve upon your chart reads, to get you a lower risk entry, to help you manage more effectively, well, then we're going to work together. And one of the things that happens, guys, is the more that you post in the room, I begin to recognize your patterns. I begin to recognize the things that you do. Some of us jump in early, and some of us trade in to termination conditions, and some of us break rules in the beginning, and that's okay. That's a part of the education process. But if you post in the room, we're going to identify it. So, for example, John Novak posted in the room, and he said, man, really good bottom, which means that a termination reversed the market. He goes, I can go long soon. With all the momentum, he takes a momentum trade, and he exits when momentum goes away. He's telling me what he did next. He's telling me where he exited. He's talking about why he did it. He's showing me where he gets in again, and he's telling me where he gets out. So what John Novak has done is he has said, hey, Mark, guess what? This is what I saw, and this is what I did, and this is where I did it. Did I do it right? And John Novak, without question, you did it right. He waited for a termination to reverse the market. He made sure that there was nothing in his way. Really? That's that clear path. He has the advantage of momentum, and then he just picked his entry areas, and he knew exactly where the market was likely to go, and that's where his final exit was. And he literally followed the plan to the letter to find his success. And this is where he would just get a gold star. So to get the best feedback, I made this for you guys this morning. I've been a busy bee this morning. You have to annotate. Use the language of the rules. Nice, John. Not a bad day when you make 22 grand per account, right? $4,000 or $5,000 in a day, and now go swing some golf clubs. You get the day off. Guys, to get the best feedback, for me to give you everything that I have in my arsenal to help you be better, this is what I need from you. I need you to talk about all three rules, and I want you to use the language of the rules on your chart. Not for me. I understand the language. I know exactly what it looks like. But what you're going to do is that if you talk about strong triggers and you identify it as momentum and you connect it to rule number one, you are creating a visual of exactly what it means to have that advantage. Same thing with rule two, same thing with rule three. And then I also want you to show me exactly where you entered and where you're exiting, and even talk about it if you need to. Talk about why you exited where you did. Guys, if you do this every day, you're going to know exactly what you're looking for. You're going to know exactly what it looks like, and you're going to have zero issues getting to where you want to be. Simulate, practice, but don't practice the wrong trades. Practice the way you want to play. Pretend like you've got your kids' college fund on the line, even on simulator, and focus on your rules. And we're going to simplify. We're going to talk about the high probability trend trade. We are going to talk about what it looks like. And guys, you have to recognize what it looks like so you know what you're going to commit to. And that's where the second part of your path comes in. Using the spreadsheet. Nexgen provided you a spreadsheet, guys. I give you the same spreadsheet every day. And I've done a lot of work on my spreadsheet. Your first page is your trade journal. Every time you take a picture, it should go into your trade journal. This is what I did. So for example, if I took John Novak's picture, John's like, I need to get this into my spreadsheet. because I'm going to come back and study it tomorrow. So he's going to go to his spreadsheet with that link that he provided in the room, and he's just going to drop it in. He may do a hyperlink. He may just put in the screencast, whatever he wants to do. And we'll just call this one Winner Winner Chicken Dinner, right? Because it sounds funny. And he's going to say, what kind of, when was it? What kind of trade was it? He's like, well, these were trend trades, Mart. How did you feel, John? Man, I felt relaxed because I was following the rules that I had in place, and I know that my rules give me a statistical advantage. Where was it coming from? It was coming from a strong bottom, created an advantage. What did my 13-2 triggers say? They said I had momentum. My 5-1 was strong. And then what was the result, guys? I won. And what's the feedback in the room? Perfect. And if you go through and you do this every day for every trade that you take, win, lose, or draw, what's going to happen is you're going to start to see patterns in the market that are bringing you success. And you're also going to see patterns in yourself. The ones that are bringing you success and also the ones that may be hindering your forward progress. By posting in the room, we're going to work together to find the ones that are hindering forward progress. So fill this out and then come back the next day and study it. Set yourself up for success. As you learn the high probability trend trade, I created the 101 tab for you guys. This takes the 3 rules in green and shows you exactly what it looks like to have your rules met. In red, it shows you exactly what it looks like to not have your rules met. So if you go through and you fill this out, guys, you're going to have absolutely no issues whatsoever determining whether or not you had strength in your triggers and that momentum, rule number 1, or if maybe that momentum was gone, the advantage was no longer with you. You'll never have a doubt. The third page is where you're going to create your trading plan. From entry to exit, 100%, guys, you're going to take pictures of everything you do. You're going to steal pictures from the room when it's the perfect trade, and you're going to be able to build a trading plan that suits your needs based on your ability to read the indicators. Until you can do that, I will hand you a plan for entries, and I will hand you a plan for management. Your job is to fill this out with the things that are bringing you success. And then make it look like this. This is the client trades. This is where you guys have spent a lot of time and a lot of effort. And not just you guys. These go back a couple years. People using this software, taking advantage of the rules, and creating winning scenarios. There's about 350 pictures in green. I would encourage you to go through and look at those. There will be some dead links. I apologize for that. But at 350, I can't check them every day to make sure somebody didn't delete their screencast account. There's the entry sequences for the high probability trend trade. There's a very mechanical management plan for the high probability trend trade and some ideas on when you can hold for bigger moves, when you should exit early. Everything we do is patterns, guys. I've filled out about 50 pictures of patterns that repeat themselves every day in the market. Your job is to begin to learn these patterns, to commit them to memory. There's also a section on those termination conditions that can stop the market. And for you adrenaline junkies, there is a NASDAQ section. I would encourage you to stay focused on the slower moving markets until you understand your rules completely before going to the NASDAQ. The NASDAQ moves about 10 times faster than the average market, and there's a couple subtle nuances that need to be put into play to have the highest chance of success. So I'm going to give you a trading plan for the highest probability trend trade. I'm also going to give you a trading plan for the second trade, a medium probability trend trade. And that one revolves around not having a clear path, but rather the potential to break. I'm going to put both of these in your hands today. And then we're just going to get at it. We're going to start talking about rules, guys. If you're brand new, it's going to feel like a lecture, but I'm going to tell you right now, I want you to interrupt me. If you have a question, I want you to interrupt me. If it is a question about termination conditions, and I'm not there yet, I'll cover it when we get to termination conditions. If I'm talking about momentum and you're like, man, I'm just not sure about this one, I want you to raise your hand and force me to clarify before I move on. I don't have a time schedule for this classroom. It starts at 9. It says it ends at noon. We have certainly run over when you guys are really in the question asking mood. I don't mind at all. I've been working since 6 a.m. this morning, guys, and I don't care how late I work. Um, Above or below the reversal bar marker? Above or below the reversal bar marker, Steve Diego? The reversal bar marker, yeah. You know what one is, right? It's where that bar. Okay, cool. So on Nasdaq with the 13.2, we can talk about that later too on entries if you want. We can go find some examples. Um, but that's one of those keys to the Nasdaq to finding success. And you got my response right. 24 ticks initial stop on the Nasdaq. Anything else, there's zero reaction time. It seems bigger, but it's not. It's the same size as crude oil. It's the same size as S&P. The Nasdaq just moves in different monetary increments, and that 24 gives you time to react. So remember, they're bigger bars, bigger time frames. All right, guys, let's get to work. We're going to talk about 3 rules. We're going to let them happen on 2 charts. Big chart, little chart. Large chart will define direction, momentum, and areas. Small chart is going to define entry. Small chart is going to be used for management, guys. 3 rules, 3 advantages. First rule is strong triggers on a large chart. Your big chart has got to have strong trigger lines, and it's pretty easy. Let's define direction, and then we'll define strength, guys. If the background on your large chart is green, the market's going up. If the market's going up, your path of least resistance is going up with it. The people in charge want it to go up. Why not go with them? If the background is red, the market's going down. Let's go down with it, right? Let's go in the direction of the people that move the market. So when I've got a green background, the market is going up. The only way that I can have strong triggers is if my trigger line color matches the background. So small triggers, these solid lines, large triggers, these dashed lines, guys, they must both be green. If the trigger lines don't agree with the background or they don't agree with one another, you don't have strong triggers. We're going to keep this very simple. Strong triggers means that your small triggers are up and above the large triggers, that the large triggers are wide. There is, who said it yesterday? There's no boogie in flat triggers. There is no momentum in flat triggers, guys. They've got to be opening up wide in the direction of the trend. Good morning, Cab. Nice to see you in here. Once space is created between the small and large, once this gap happens, guys, I want you to picture scissors opening. Once those scissors begin to open, you have strong triggers. Strong triggers tell you that the odds are favorable for the market to continue up in an uptrend, or the odds are favorable for the market to continue down in a downtrend. You're going to hear odds favorable momentum each and every day. You're going to hear odds favorable momentum. You're going to see it typed on charts, OFM. And odds favorable momentum is, man, that's the one. That's the one I don't like to do without. Because this is telling me that the forces in charge not only want the market to go up, but they are pushing it with enormous strength. And it's hard to stop that freight train. When I have strong triggers up, I'm going to use that refinement chart to buy Fibonacci support on a smaller, faster chart, or sell Fibonacci resistance on that smaller, faster chart. Your large chart isn't going to show all that motion. You're going to see like a tail. We don't trade these tails, guys. We're going to refine it. You will pinpoint where that tail is most likely to form. You will pinpoint where this tail is most likely to form on a smaller, faster chart. But you will be able to use those tails to go back and study, to make sure that rules are met, to see those entry rules come in, and to really develop a little trust. So strong triggers, everything says up, the separation, the scissors are open, odds favorable, guys. Odds favorable momentum pushes the market. Odds favorable momentum can break those key Fibonacci areas, and odds favorable momentum will cover some of the mistakes that we like to make as new users. But momentum doesn't last forever, guys, and eventually the scissors close. And when the small triggers work their way back inside of the large triggers, we call this a weakening of the large triggers. It's a slowing of the trend, and anything can happen up or down. Weak triggers are where you start to see bigger retracements in the market, whether it's coming from an area or not. Weak triggers can precede reversals. Weak triggers take away that advantage of momentum. So you want to be aware. You want to be looking at your large chart and asking yourself on the most current bar, Are my small triggers below the large triggers? Are the large triggers wide? Can you guys give me a why in the room if you see right now in the moment? We do in fact have strong triggers. Every one of you will be able to pinpoint where that tail is most likely to form. Notice how weak triggers preceded the reversal. That push up. Guys, strength pushes a market down. We're watching that strength push it down right before us. Momentum is the one advantage that I never want to do without, guys. Momentum, there are trading plans built around momentum. Momentum doesn't last forever. Strong triggers is the best of the best. If you're a brand new user, this is where you should start. This is the high probability look. This is where we're selling Fibonacci resistance to go with that trend. When one line of the small triggers gets inside of the large triggers, this is the first sign that momentum is slowing, and you're going to say out loud and scare the cat, momentum is slowing, I'm losing the advantage. I'm going to have to rely on my chart reading to make sure everything agrees if I want to take a short trade and manage it. And then once those small triggers work inside of the large triggers, guys, some of you are going to say, I have to be in a short trade. And some of you will have the repetition and the ability to read charts well enough to say, I still have enough advantages and my chart reading is solid. I will manage it aggressively. And if anything changes, I'm in a GTFO. And then when these weak triggers hit an area, man, this is when areas hold. This is when termination conditions come into play. And that's rule number 2, guys, making sure that we're not trading into a termination condition, making sure that we have room to our profit targets. This means that we have a clear path. But before I go to that, one more time, I just want to ask, is everybody good with the idea that strong triggers push a market? And look how far it pushed it. And now I'm getting those weaker triggers right near a Fibonacci area. Let's go back and look, just for grins. Strong triggers pushes the market up to trouble. Trouble reverses the market, and strong triggers push it back down. Wow. 101 stuff, guys. Strong triggers, weak triggers in an area, bounce. Weak triggers, bounce. So go back. Guys, you have the advantage of 10 days worth of data to go back and learn to trust strong triggers. And now you also are about to figure out how to understand if you have a clear path. And we're going to do this on the large chart as well. The large chart is where we define termination conditions. And a termination condition is nothing more than a Fibonacci-based indicator that may reverse the market, guys. We're going to use the T3 trigger lines, the same trigger lines that establish momentum. And you'll understand whether or not these areas are termination conditions. You'll understand if they have the potential to break or if these areas have broken. The areas on the large chart that we're looking for: blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots, cyan divergence low lines, magenta divergence high lines. Guys, these are lines on the large chart where the people in charge are making decisions. These are where buyers buy and sellers sell, and this is where fights happen that you don't want to be a part of. In order to determine whether or not you have a termination condition, the first thing that happens is price reaches an area. Your dynamic Renko bars have to get to an area. And if they do, ooh, my gold chart just went completely blank over on the side here. When price reaches an area, excuse me one second, I'm going to kill, no I'm not, it came back. When price reaches an area, all you have to do is ask yourself, where are my trigger lines? I'm going to kill my Ninja Trader real quick. When price reaches an area, I want you to ask yourself, where are my triggers? So if price reaches Fibonacci support and the trigger lines remain above support, or if price reaches Fibonacci resistance and the trigger lines remain below resistance, guys, right in the moment, this means that you have a termination condition. This means that this is an area that may stop the market. And one of the things that new users absolutely hate to admit is that they don't know, raptured. They don't know if it's going to stop the market, guys. You don't know if it's going to create a bounce, if it's going to reverse. You don't know if there's going to be a fight that happens there for the next 3 hours. But the one thing that you can know with absolutely no uncertainty is that if price reaches an area and the trigger lines remain above support or below resistance, this is an area that may stop the market. It was, Morgan. All that odds favorable momentum broke it. As I have been absolutely annihilating my charts all morning, making videos, changing indicators, making things happen. So there's a good chance that I'm fudging things up a little bit. So I'm going to bring that up. But while I do it, price reaches the area, trigger lines remain below resistance. Let's go back to our guide here. Price reaches support, trigger lines remain above. No more short trades, guys. Not in the moment. Is everybody good with that? What's the opposite of support? Resistance. Price reaches resistance, triggers remain below. Guys, don't go long into those areas. It's likely to stop the market. It has the potential to ruin your good time. I'm going to close down gold. And I'm going to open up crude oil. And 90% of your day is spent reading indicators, guys. You may hit resistance and it bounces all the way back to support and the triggers remain above, and you have to tell yourself, man, I can't go short into support and I also couldn't go long into resistance. This must be part of that 90%. And then it comes all the way back up to resistance. It comes to a divergence high line. It comes to a second resistance. And those triggers remain below. And once again, you have the great fortune of understanding that there are no long trades into this area. You get to avoid these losers. And when this termination condition without any trigger lines through it reverses the market, guys, that's one of those strong tops John Novak was talking about. This is a reversal coming from a key area. This creates strength. And when this reversal gives me odds favorable momentum and a clear path, I'm going to look to sell Fibonacci resistance. That's my highest probability trend trade that I can possibly take. So price reaches an area, no triggers, no trade. Let it be that easy, guys. Trading in determination conditions is one of the biggest mistakes new users make. So spend a little time studying it. Go back. See how many times the market stops right on those key areas. Many times it's like to the tick, which is pretty outstanding. So decisions will be made. Sometimes the decisions are that the sellers are going to try to break it or the buyers are going to try to break it, guys. So your second scenario, no trades into it. If the small triggers absolutely smash, all caps, smash, not peek their head right here, but get like 4 points below. If it smashes through that area with odds favorable momentum, guys, this is what we call a 50-50 look. It has nothing to do with your chances of winning. 50% of your triggers break the area, 50% have not. This is when areas have the potential to break. And guys, areas will have the potential to break all day long, but they will never, ever, ever be a clear path until both the small and the large triggers get to the other side of support. Then you'll see it behave as resistance. The path is clear. We're going to look for momentum. We're going to look for rules to be met, guys. Your highest probability trend trade only happens with a clear path. The medium probability trend trade, the 50-50 trade, you'll have a solid plan on how to take advantage of the potential to break. And you're going to see a lot of these throughout the day. I'm going to give you very specific rules to take it. But remember that potential is nothing more than the potential. That is 1/3 of your advantage is gone. So let's see if crude oil loaded up. And we'll find a couple examples. Man, I should probably have a template on there. I'm telling you guys, I've been busy. So we'll go to the next slide while that loads. Price doesn't reach an area, but the market still reverses, guys. This is never a strong top or bottom because it takes a termination condition. Price doesn't reach the area, it reverses, never a strong top or bottom. All that momentum breaks the area. There's one of those potential entries. And I want you to see this. The market comes down. Momentum smashes through support, guys. Doesn't even blink. You said no trade here. You said potential for trade here. You said I'm looking for a trade here. And man, it never gave one. That happens. 90% of your day is spent reading your indicators. And it goes head first into these yellow 1-to-1s. And when it does, each and every one of you in the room just has to ask yourself, where are my triggers? And the triggers remained above this Fibonacci area. Therefore, this Fibonacci area has the potential to stop the market. Oh, I should probably connect. There we go. From this area, it bounces. Big untradeable bounce all the way back to Fibonacci resistance. And when it gets there, all the triggers remain below resistance. That's a termination condition as well, guys. We're starting that 90%. That 90% of waiting for advantages. This market ping-pongs in between areas. The trigger lines don't match one another. It has the potential to break, but it doesn't. And this goes on for about an hour, guys. And if you learn to do nothing when there's nothing to do, if you get on board with the idea that every movement in the market isn't yours, that you're waiting for the best movements, eventually you get momentum. All of your triggers are above resistance. It's behaving as support. And you can pinpoint exactly where that tail is most likely to form. And this becomes your highest probability trend trade. If you resist temptation, ignore that devil on your shoulder for 45 minutes, you get to keep everything. If you form opinions, if you take trades without advantages, if you're giving away money needlessly, well, then you have to hope that this winner covers the losses. So, guys, is everybody good? Let me see if I can pull this up. Oh, this is killing me. Forgive my technical challenges here, guys. I'm trying to connect. There we go. Now I've connected. I'm going to close this and I'm going to open up a market and we're going to talk about it. Is everybody good though? Termination conditions. Rule number 2. Lines on a large chart can ruin the fun. Lines on a large chart are where decisions are made. Lines on the large chart, when price reaches one, you have to ask yourself where the triggers are. It's not price getting through an area, it's triggers getting through an area. Sometimes the market reverses from nowhere. We pointed that out. Whether it's a low, whether it's a high. You're going to be able to use the small chart to help you see change that you can't see on a large chart, guys. This is going to be the only termination condition that I will ever accept on a small chart. Large chart is where areas are defined. Small charts for entries, guys, but sometimes you're going to see losses of momentum on a small chart. If the market goes down and pushes up and there's a loss of momentum, momentum doesn't follow price, you're going to get a blue line. From a high, you'll get a magenta line, guys. This is called divergence. Divergence is nothing more than a loss of momentum. But if you get 3 divergences in the same price range, no matter what time frame, no matter what market, that may reverse the market, guys. But you're going to see it first on the smaller, faster chart because that's where you've got the most bars to create pivots. 3 divergences in the same price range may terminate the trend. It becomes more powerful when the small triggers work their way back inside of the large triggers. Those scissors close. We get that anything can happen look. Makes it more powerful. And it becomes more powerful still when that final pivot from a low is higher than the previous, or that final pivot from a high is lower than the previous. It creates a head and shoulders pattern. You'll be able to use this look on a smaller, faster chart. You'll be able to take a look at those 3 divergences from a low or a high, and that faster chart is going to let you see change that you can't see on the large chart. This is the only time where a small chart gets to dictate that rule number 2 isn't met. So, large chart is going to define the trend. Large chart is going to define the areas. Large chart is being a colossal pain in the butt right now. I'm definitely having technical difficulties. Small chart's going to be used for entry, guys. Small chart's going to be the chart that we use to pinpoint exactly where the market is most likely to continue. Small chart is going to tell you where to enter your trade. I might need to. Yesterday we determined that my internet wasn't moving as fast as it needed to move. It seems to be back on track today, but maybe not completely. I'm going to kill it one more time, guys. Sorry. We're going to pinpoint on a smaller, faster chart exactly where the market is most likely to continue. We're going to be able to pinpoint with such accuracy that you're going to be able to use a limit order. And you're going to have that limit order waiting at areas. You're going to let the small crowd do their thing, guys. That small crowd is going to fight everything that the large crowd wants to have happen. And you're going to wait right at an area inside of triggers on that smaller, faster chart. And this becomes your entry for the highest probability trend trade, guys. You're going to be able to pinpoint with accuracy where the market is most likely to continue. So what we're going to do is we're going to incorporate that language a lot, guys. And we talked about the tails on the large chart. We don't trade tails on the large chart. We're not trading that pullback on the large chart. It's too slow. We're taking an x-ray of this one bar. And guys, when the market is all the way up here, when you think that you've missed the trade, when you're just despondent thinking, oh my gosh, I'm not going to make any money. This is where the small crowd usually fights, in between areas, when you have momentum, when you have a clear path. That small crowd's going to start a fight. They're going to push, but they're probably not going to be able to push that far. Large crowd wants to go up. They have a clear path. There's momentum. So what you're going to be able to do, guys, is you're going to be able to pinpoint these areas inside of triggers, and you'll notice that there's a correlation. The tail on the large chart is the pullback to areas inside of favorable large triggers on the small chart. And this is kind of that two-chart process. And I want to cover one more thing. Large triggers are moving averages. Large triggers, price returns to the large triggers, guys, all day long. It pulls back to large triggers. It pulls back to large triggers. Whether it's a large chart, small chart, range chart, doesn't matter. Price tends to return to the large triggers. So what you're going to be able to do is we're going to take the large triggers from the large chart and superimpose them onto the small chart. So you're going to have two sets of large triggers on your entry chart. The large chart large triggers and the small chart large triggers. And what 27 years of teaching people to trade has taught us is that when these triggers overlap from your rules 1 and 2 chart, the large chart and the small chart, when they're one on top of the other, guys, when they look like two snakes riding piggyback, that creates a huge advantage. Because if we expect price to come back to these triggers, and the triggers from the large and small chart are in the exact same spot, guys, this is going to reduce risk. This is going to maximize your ability to pinpoint exactly where the market is most likely to continue. And when they overlap on top of one another, we're going to call this favorable large triggers. Favorable large triggers create a very concise point where the market is most likely to bounce. We don't expect price to bounce off of trigger lines though, guys. We're going to give it something solid. Fibs, mid-bands, yellow 1-to-1s inside of those triggers. And this is where the magic happens, guys. This is how you pinpoint exactly where the market is most likely to continue. So when the large chart says up, when the large chart says that the path is clear, when the large chart has momentum, and you're worried that you're just not going to get paid, guys, we're going to wait for the small crowd to start their fight. And that begins with a reversal bar. This red bar, after all of these green bars, this says, hey, the fight is on. The reversal bar is not the entry for the highest probability trend trade. This is a signal that it's time to pinpoint where the market is most likely to continue. So at the time of the reversal bar, the first thing I want you to do is find your trigger lines, large and synthetic. Draw a box, draw a circle. Understand that this represents where the price bars are most likely to return to. And then we're going to look inside of those triggers, below the highest line, above the lowest line, and we're going to look for fibs, mid-bands, and yellow 1-to-1s, guys. Because we're going to give the market a place to bounce off of. This blue line represents your window of opportunity, the point where the market is most likely to continue. Your job as a rules-based trader is to activate a limit order 2 ticks above the highest point of support, the area closest to price. Because the large chart has odds favorable momentum and the large chart has a clear path, we don't expect the small crowd to get a lot of work done, excuse me. We know there's the potential, but we're not going to trip over a couple pennies to save a few dollars, guys. One of the things that you're going to be able to do with this methodology is establish your risk and know exactly where the market shouldn't go and exactly where the market should go. And this becomes your entry for the highest probability trend trade long. For a short trade, it's exactly the same. The reversal bar begins the fight. It's not your entry. Locate your trigger lines. Make sure that they're overlapping one on top of the other. Inside of those trigger lines, you need fibs, mid-bands, or yellow 1-to-1s. In this case, we have one line. We have one area of resistance, a mid-band. Your limit order is going to go 2 ticks below it, and this becomes the entry for the absolute highest probability trend trade. Guys, we are not trading tails. We are not trading tails on a large chart. What we're doing is we're identifying momentum and the potential for areas to break, or maybe that areas have already broken. And then we're going to take a smaller, faster chart. Let's see if this one lined up. And you're going to be able to identify the pullback to support right inside of those triggers. Can you guys give me a Y if you see it? And it did it there too. And it also did it right there. This is the pattern, guys. This one was still a termination condition. This one had the potential to break, absolutely smashed through. Easiest entry ever, 81.38. It didn't blink until $240 later. Pretty cool, right? This pattern repeats itself every day. This is a pattern that you're going to become very familiar with, that you're going to be able to recognize at a moment, so that you can find that highest probability trend trade. You can go back and circle tails when the rules are met. If it lines up with area support inside of favorable large triggers, guess what? Take a picture, annotate your chart, drop it in the room, make sure that it's the right trade, and if it is, go to your favorite looks. And don't ever miss that trade, because that is the trade that creates the statistical advantage, guys. And once you know where the market is most likely to continue, you know where it shouldn't go. You know that it shouldn't go beyond that window of opportunity. And this is where your first stop is going to go, guys. Your first protective stop is going to go 4 to 5 ticks above the window of opportunity. When you downloaded Nexgen, guys, when you got the software, it came preloaded with all sorts of stop strategies, trade management strategies. For crude oil, for the S&P, 12 ticks stop is appropriate. 12 ticks isn't your stop. 12 ticks gives you reaction time to put the stop where the market shouldn't go. If you're a NASDAQ trader, 24 ticks. It's actually the same monetary number as 12 ticks on crude oil. 24 is your initial stop. It's not where the stop goes, but rather giving you reaction time to put it where the market shouldn't go. So your initial stop, 4 to 5 ticks beyond those triggers, beyond that correction point. And two things are possible. Either the market is going to bounce off your area inside of favorable large triggers. It's going to head the direction of the momentum and the clear path, in which case you'll get a reversal bar and you'll reduce your risk a couple ticks above it. Or that small crowd ate their Wheaties and they're going to blow right through that window of opportunity and they're going to hit your stop. And I want everybody in this room to be okay with the idea that stops get hit. I want everybody in this room to be okay with the idea that you probably won't win every trade. That if something wins 70 to 80% of the time, it has to lose 20 to 30% of the time. So your focus isn't on wins or losses right now, guys. Your focus is on identifying advantages and making sure that you're trading a pattern that has been proven to win more than it loses. And the cool thing is once you understand stop placement a little bit and you're willing to move it when you get a reversal bar in the direction of your trade, it's not uncommon at all to see you guys take the perfect entry at the exact right spot to get the reversal bar to move the stop, and the darn trade fails like it does 20 to 30% of the time. but you've only given up $30, $40 perhaps, because you have a very, very solid plan on entries and because you have a very solid plan on exits. And what these pullbacks do for you, and I'm going to go through this and I want to show you kind of some common things. At the time of the pullback on the large chart, did that take the picture? There we go. You might only have 5 ticks to that key area, and you might say to yourself, well, that's only 5 ticks. That's not nearly enough room to make any money. I'm going to have to skip this trade. Has anyone ever done that besides me? Oh man, I'm 5 ticks from the fib. I can't take this trade. I don't really have a clear path. When you buy pullbacks to areas inside of favorable large triggers, that 5 ticks can turn into 27, can turn into 30, it can turn into 35 ticks, depending on your entry. So by waiting for the pullback, you actually increase your profit potential dramatically. And if your initial stop has to go where the market shouldn't, by waiting for the pullback, you decrease your risk dramatically, especially if you get that reversal bar. Some of the things that new users will say, guys, so I want to go through all of this. I want you to be clear. First, I see people entering on the reversal bar. Guys, you're entering when the momentum is going away for the trade. This does nothing more than reduce that profit potential, and it makes your risk huge. And it doesn't guarantee a winner. All it guarantees is a bigger loser if it doesn't work. I also see people saying, but Mark, the small triggers turned against me. That's not odds favorable momentum anymore. The colors don't match, guys. This is where I remind new users that odds favorable momentum is a product of the large chart. Momentum is defined on the large chart. This little blip on the small chart is just the loss of momentum we need to get us back to the perfect entry. I also see people very often, I love to go through these scenarios because everyone does them. None of us admit to them. Where it doesn't quite make the entry and the market starts back up. And has anyone ever heard the phrase FOMO? The fear of missing out. The fear of missing out that causes us to jump into this market rather than waiting for our entry. Guys, everybody's done it. Everybody will do it if you haven't yet. What does that do for you when you don't trade from the areas? Your profit potential is cut in half and your risk is huge. And we've all done it and we'll all do it. And these are the things, guys. Your entry chart is a small chart. There's going to be fluctuations on it all day long. Other things that I see very often, I'll just get in here because I don't want to miss it. I'll get in the middle of nowhere. And again, increased risk, decreased profit. I'll wait for it to confirm 3 bars before I enter because I'm scared to buy on the way down. Increase risk, decrease profits. So guys, I'm telling you right now, great entries, rules-based entries create very manageable trades. You're on simulator. Activate 2 ticks above it, guys. Learn to trust it. If you are just fearful, let a reversal bar get you in because at least then that your risk is established. It doesn't guarantee a winner, guys, but at least you have risk in place. But your goal should be to activate a limit order right at the areas inside of favorable large triggers so that you can catch that highest probability trend trade, guys. That is where the money happens. That is where the best of the best happens. Are there any questions about the high probability trend trade? You guys want to go through an entry sequence? It's Friday. Let's have some fun. In the client trade section, guys, I actually put these sequences in there. So, for a short trade, the first thing that you have to insist on, guys, there can be no wiggle room, is that the rules are met on the large chart, that you have momentum, that you have a clear path, that those 2 advantages are in place and the large crowd is telling you that everything is going down, and you make the decision that you want to go down with the large crowd. So you wait for the reversal bar. The reversal bar is not your entry. The reversal bar is what's going to have you looking for the best of the best spot. So at the time of the reversal bar, this signals the pullback, the fight from the smaller crowd. Your job is to find your trigger lines. From the top line to the bottom line. Guys, the tighter they are one on top of the other, the smaller the range is going to be. And this is a pretty big range. This is from 50 all the way to 72. Notice that it's already hit a trigger line. Impact on the trigger is not your entry. When it hits the trigger, guys, that's the reversal bar. You're looking for them. Once you find your trigger lines, you've got to find the areas within, guys. We're going to turn that big box into a small box. Sorry, I got ahead of myself one. We're going to turn that large box into a window of opportunity, the point where the market is most likely to continue from the lowest point of resistance to the highest point of resistance inside of favorable large triggers. Areas inside of favorable large triggers. These areas beyond the triggers are not where we expect the market to bounce. Your stop should get hit before you ever hit that fib. Your job, once you identify the area where the market is most likely to continue, is to activate a limit order, to right click on your chart, activate a limit order that says, if the small crowd can push this high, I will enter the market. And you might as well just start praying because you've done everything that you can do. You've insisted on momentum, you have guaranteed a clear path, and you've pinpointed where it's most likely to continue, and your limit order is waiting, guys. And if the small crowd has it in them that day, and they hit your limit order, you will be in a short trade. But you're in a short trade with odds favorable momentum, the idea of strength and triggers. You're in a short trade with absolutely nothing in the way. Your path is clear. And you have entered where the market is most likely to continue, guys. And this is a trade that typically wins 70 to 80% of the time. This is a trade that creates confidence through the memory of success. This is a trade that once you understand these very basic concepts, you will be able to read your indicators and you'll be able to open up your charts and say, I have odds favorable momentum. And with that odds favorable momentum, I haven't reached that fib yet. And man, maybe I should have been looking for a pullback. And it's going to happen that quick, guys. And you can scroll back on a large chart and you can start studying these things, right? Price pulls back to support. All the triggers are above. We expect support to hold. Price hit resistance, even with odds favorable momentum. And look at the untradeable bounce. And weak triggers. And there's that push down. And that downtrend stopped almost to the tick right at Fibonacci support. Fibonacci support creates an untradeable bounce. Resistance creates an untradeable bounce. Resistance creates a bounce. Pretty cool, right? I don't have to be in a trade to be smart. There's that divergence high. Smalls broke, large didn't. Started a reversal. The same thing happened here. Weak triggers in an area. I wonder what this one looked like. I'm going to circle a tail. And I'm going to go find that tail on my smaller, faster chart. Does everybody see what I'm doing? I'm not taking trades to get smart, guys. I'm developing trust by just seeing how many times my rules tend to create an opportunity. What do you guys think about this one? I know quite a few of you took this one yesterday. You knew which direction the market was going. You knew about all the momentum. You knew this had the potential to break, and you knew exactly where the market was most likely to continue. And once you got into this trade, guys, you knew exactly where it was likely to go with all that momentum. This is the beginning. But if you don't understand momentum, if you don't understand a clear path, it's going to be tough to catch a high probability trend trade. It's going to be difficult to start moving outside of that high probability trend trade. So I'm giving you a gift, guys. Chart Reading 101. This is designed to make you a chart reader. This is designed so that you can recognize those simple advantages at the drop of a hat. Go take 25 pictures. This is your homework this weekend. I want you to get 20% of this done. I want you to take 5 pictures each this weekend. And I want you to take strong triggers. Just scroll back. You don't have to be in a trade. And I want you to take pictures of weak triggers. I want you to take pictures of a clear path where the small and large broke through the area. And I also want you to take 5 pictures of termination conditions. So brand new users, this is your homework. And I also want you to take 5 pictures of the potential to break. And I want you to go back and I want you to find those areas inside of triggers. I want you to start studying this. But the task isn't to simply take the pictures, guys. You have to annotate your charts with the whys. So when we started this morning, we talked about annotation. This is strong triggers. This gives me momentum. This is rule number 1. I'm never going to miss strong triggers if I do this. Price had not reached an area. My path is clear. Rule number 2. Entered on a pullback to an area inside of favorable large triggers. Guys, if you write that on your chart every time, you don't trade off the reversal bar. You don't trade when it hits the triggers. You literally are telling yourself to wait for an area inside of favorable large triggers. This is how you get to where you want to be, guys. I just dropped it in the room. On your spreadsheet, I've already given you over 100 pictures to help you study that you can check yourself against. But because I'm an overachiever some days, I'm going to give you the same look with the rules. There's your strong top or bottom. There's your momentum. There's your loss of momentum. You can make this bigger. Termination, potential to break, broken, entry areas defined all the way down to where the limit order is going to go. I'm also going to give you guys a high probability trend trade checklist that you can print and put on your desktop, guys. Nobody in the history of this checklist, true story, has done worse than 70% profitable. Nobody in the history of high probability trend trade checklists has done worse than 70% profitable. If your goal is really to get paid, guys, you should be focused on the best trades, not the most trades. This is a great way to get going. This creates a plan capable of winning before you're even a really advanced chart reader. And then finally, those all 3 went in the room, guys. I'm going to give you my spreadsheet again because I want to make sure that you have access to everything that I've done. I'm also going to give you guys the PowerPoint that I just used to teach this morning session with so that you have access to every picture that's been presented in this classroom today. And then finally, I'm going to give you what's called the KISS plan, guys. This is your rock solid plan. This is, what is that? This is your first 30 days, guys. The KISS plan is a stepping stone in your learning journey. The KISS plan is designed to optimize your chances of success with a high probability trend trade. The KISS plan is not the end of the road for any of you, but the KISS plan is designed to teach you to read your indicators. And then through simulation, through study, through class feedback, through participation, continuous practice, AI tells you that you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. That is a fancy computer-generated way of saying, guys, when you can read your charts, you're going to start seeing some opportunities. You're going to start recognizing some patterns, and you're going to find more ways to get paid. But in the beginning, keep it simple. Keep it focused. Don't give yourself too much to think about, because the more you look for, the less you'll find. And the more you look for money, guys, the more you're going to find losers. So focus on the process initially. In your simple plan for consistency, guys, don't fight the large chart. Don't fight the large chart. The large chart leads the way. The large chart is what the people in charge want to have happen. The large chart are where they're going to react to areas. The large chart is not you, guys. You are a guppy in a sea of sharks. If you fight the large chart, if you fight the momentum on the large chart, if you fight the areas on the large chart, what you have done is you have taken the step towards financial suicide. This is a book written by my brother. How to Commit Financial Suicide, One Easy Step by John Novak. Note, only one page has any information. That's all you need. All the other pages are blank, guys. Warning signs your friends are in trouble. They are trading against strong triggers, one of the most common broken rules. Forming the opinion that the market's going to go the opposite direction that it is going. Typically, this results in you getting run over. Trading into termination conditions, believing that you are special and that area is just going to break for you. Even though your 75 pictures of it holding suggests otherwise, you're typically going to get run over. These are the two most common mistakes, guys. And if you commit to not fighting triggers, to not trading into areas, you're going to eliminate about 70% of the mistakes that new users make. My upload failed. Let's try it again. Won't even worry about it. So define your entry. That's the first thing. We've spent an hour talking about nothing more than an entry, guys. We've spent an hour discussing how to get into the market where the market is most likely to continue. Even on this KISS plan, I've given you pictures of what it means to have these things met, to have your rules met. Define your entry. Great entries create very manageable trades. Great entries reduce risk. Great entries create more profit potential, guys. And if you give me 20 trading days of taking as many pictures as you can and posting in the room, of asking every question that crosses your mind, of taking pictures of strong triggers, weak triggers, terminations, clear path, guys, by the end of that 20 days, you're probably not going to need me anymore. That's my goal. My goal is that you fire me because you did the work. But once you get in, you have to manage it. You have to do something with that great entry. And this is where all of you super brave traders pucker up. This is where fear is going to try to work its way into your plan, guys. So the same way we have such a mechanical approach to entry, the same way, the only way we will ever enter a trade is if the rules are met. We're going to behave the same fashion on management initially. It's going to be very if-then. It's going to pull the emotion out. It's going to pull the opinions out. And then once again, that catchphrase, you will craft a plan tailored to your personal goals based on your ability to read the indicators, guys. Once you're a chart reader, you're going to manage trades very differently. You're going to see things happen so fast and be able to react to them that you're going to know when to exit sooner, you're going to know when to hold for bigger moves. But until you're capable of that, let your management plan revolve around 100%. We'll say first, the rules being met. Let your management plan revolve around having these advantages. And then the first step of your management plan is when you get in where the market is most likely to continue, your stop goes where the market shouldn't. Beyond those areas inside of triggers, guys. If you place your stop below resistance inside of favorable large triggers, they're going to come get you, they're going to stop you out to the tick, and then they're going to drop. And what's kind of cool is you knew that it was going to happen, and it develops a little trust. It's okay, you'll probably do it. But with the stop where the market shouldn't go, with the perfect entry, guys, more often than not with all those advantages, you're going to get a reversal bar in the direction of the trade. This is your first stop movement. If I enter where the market is most likely to continue, then my stop goes where it shouldn't go. If I get a reversal bar in the direction of the trade, then my stop goes 2 ticks above it. And there's nothing for me to do. I'm either going to get stopped out or I'm not. That's okay, Andrew. We're going to go through it, I promise you. And we're going to look at your picture first before we take break. But I want you guys to see this. Nothing to do. I'm either going to get stopped out or it's going to hit my first target. And my first target for the brand new user, for the high probability trend trader, for the KISS plan user is $100, guys. And $100 creates confidence. And $100 feels good. And $100 is really cementing the trust in the methodology. And it's a victory. And victories feel good. Celebrate every one of them. And then you're also going to move your stop to break even. So not only did you get paid, but you also have nothing to lose. And you're either going to get stopped out, break even, and guys, that break even stop's going to get hit a lot as a brand new user, but it creates the courage for you to hold on to that trade and see if the second target gets hit. And if it does, it's only $200 in the distance, which means on one trade with all the advantages, you made $300, guys. And $300 is about 72 grand a year on one trade with all the advantages. You don't have to be in every move in the market. Every penny traded is not your penny. If you're patient, you wait for the best of the best, guys, you'll have a plan that is capable of winning while you learn to read your indicators. You'll have a plan that has been proven. I've had people get funded within their first 30 days of the Nexgen on these prop firms by sticking to the KISS plan for the high probability trend trade. And then after a couple weeks, when they start getting good at just recognizing these things, going over to the 50-50 trade. And I'm giving you the KISS plan for the 50-50 trade as well, guys. And this is designed to optimize your chances of success with the 50-50, that area with the potential to break. But you're going to have to do the study, the class feedback, the simulation, the continuous practice. And then you may change this one. But until you do, this one revolves around giving you the best chance of success, guys. So the area is not broken, which means that you don't have a clear path. This plan is designed to keep you from sacrificing momentum. So it should come from a strong top or bottom. You have to understand that concept to be able to take this with the highest chance of success. A no triggers through termination that reverses the market. You have to have momentum on both charts, smalls outside of the large. If you skip that lesson in the high probability trend trade, well, how are you going to do it on the 50-50? And then it tells you no divergence on the 5-1. This is the #1 killer of 50-50 trades, guys. Divergence is a loss of momentum. And if your path isn't clear and you're giving up momentum, 66% of your advantages are gone. And it is so important that I repeat it here. Divergence, no trade. Just a friendly reminder. This is why most new users lose the 50-50 trade. And then once you're in, it tells you again, if divergence prints, exit the trade without hesitation. That is what kills them. So I gave you plans for both of those, guys, and we'll probably see some during the day today. And then Andrew, let's go through and look at yours. So the second half of class is going through and talking about what you guys see. The second half of class is going through and breaking down these charts. So Andrew, you dropped it in there. So first thing, congratulations, you're on your way to getting where you want to be. And I'm going to go through a couple different things. You believe this is a strong top. Price reaches, no triggers break. Andrew, absolutely. It's a strong top. Odds favorable momentum, absolutely. You do have momentum. Clear path, rule number 2 met, absolutely. You have a clear path. Andrew, your large chart read is absolutely perfect. And I'm going to show you something. And this is going to be the one. And let me tell you, your entry is absolutely perfect. You are in 2 ticks below the lowest point of resistance right at those trigger lines. So Andrew, I got to tell you, for a weekend, you nailed it. Good job. Were you paying attention when we talked about price may go to the large triggers on the large chart, or price may go to the large triggers on the small chart? That correction point where price bars may go? Because what that does for you is it says, hey, wait a minute. I may go to that second correction point. I may go to that large chart correction point, which means that risk has to go beyond it. And that's okay. Man, the fact that you're annotating charts, that you're posting, and that you're a week in and you're already recognizing these entries is amazing. Is absolutely amazing. Great job. There's a couple things that I noticed on your chart, though, that are going to create a little bit of an advantage, Andrew. Large charts have fibs on them from 3 time frames. There's actually a higher time frame, a 21.3. There's the native time frame, the 13.2. And then there's also the 5.1. And what I'm noticing is that we might be missing a fib somewhere in here, which would have put this on a 50-50 look, which would have let you know that this divergence might create that higher bounce to go take this out. But we'll talk about that in a second. I'll show you how to remedy it. But I gotta tell you, 100%. If I'm looking at your chart and I'm talking about momentum, 100%, Andrew. You nailed it. You understand it. You can see it. You can recognize it in the moment. When I talk about a clear path, the same is true. 100%. You didn't have any problem with that. And then the entry, and let's go through this. Pull back to an area inside of triggers. 100%. The only challenge with the entry look is that I had the split on these triggers, which gave me 2 potential correction points, and it made it up to the second one. Nicely done, Andrew. But do you see, and guys, this is for everybody. He talked about where the market's coming from. He talked about his first rule, his second rule, and he showed me exactly where you got in. So, Andrew, go ahead and use the language because it's gonna cement the familiarity with it. And why 10 ticks? Why did you choose this stop? And there was, Pete, because his synthetics aren't on. Was it the number or was it the location? Congratulations, Chef. Nice job, man. Enjoy your weekend. Pete, the only thing we can look at is the chart that we have, right? So there is a clear path, 100% on this chart. And Andrew, I ask that not to put you on the spot. That's okay. So it's not 5 ticks above the fib. It's 5 ticks where the beyond where the market shouldn't go. And that's where the correction point got you. And that's the only thing that I want to say. So your thinking was right. If these triggers were tight one on top of the other, if they were what we call those favorable large triggers and that was your window, then your stop is perfect. 100% perfect. But because they were split and because price could very easily come up into these triggers, that's really where the market shouldn't go. And that's a pretty good amount of risk on the trade. I get that. And that's a little scary. Perfect job, Andrew. When I teach this class, and I think, man, if they would just write on their charts, they would know. If they would just post in the room, we could have these great conversations. So from the bottom of my heart, thank you so much for doing this, because it's this sort of annotation, it's this chart presentation that's going to get you exactly where you want to be. And what, 4 or 5 days in, you've already got these rules in place. Now we just have to practice them. I want you to try this for me, Andrew. Right click on your large chart and go to data series. Oh, for sure. So Andrew, on the ticks, if you have those favorable large triggers where they're overlapping one on top of the other, more often than not, it is going to be 4 to 5 ticks beyond that highest point because the triggers are so tight. But when they're split like this and the correction points are separate, risk is going to increase. And one of the things, we talked about this a lot because split triggers happen a lot, Andrew. There are traders that will say, I know it can go from here, and I know that it can go from here. What I'll do is, this is one of those instances where I'll say, let me wait for that reversal bar. Let me get a confirmation bar, and what that does for me is my risk is established. When this bar prints, I know exactly where my stop goes. It's moving in the direction of the momentum and the clear path, and everything is doing exactly what I want it to do. So when I have 2 correction points, I love a reversal bar. And I know that's a little different, right? but it's not favorable large triggers. It's not the best of the best look. So when it's not absolutely perfect, why not insist on a little confirmation? Does that make sense? And I want to say that there's a couple guys in the room that were getting smoked on these split triggers over and over and over. And then one day, we're like, what if we wait for a reversal bar? And it was almost instantly that it changed their trading. So we've incorporated that a lot. But it has to be a reversal bar when the rules are met. It's not every reversal bar that just gets you into the market. So great job, Andrew. Guys, that's my first hour. I'm going to leave you with crude oil here. And I'm going to go stretch my legs. Maybe send my wife a text. Tell her I think she's pretty. I don't know. Stand up. Stretch. Breathe through your eyelids. Do whatever you need to do to get away from these darn screens for a second. Because right now my large triggers are red and my small triggers are green. And my smalls aren't through the area and they're all above this area. And I don't care how much you wish, want, and hope. There's not a high probability trend here. Griffin, go get you some coffee. I'm too wound up. I can't do it. And when I come back, ladies and gentlemen, we're going to look at all the pictures that you posted and we're going to go back to them the way I just did it. We're going to talk about momentum. We're going to talk about a clear path. And we're going to talk about an entry area. And if you don't give me that information, guys, you're not giving me the best chance to help you. So I'll see you in 5 minutes. right, everybody, let's get into that second half of class. I'm going to scroll up to the very top of the chat box here, and I'm going to start clicking on the links that you guys have provided me. Let me find them. And what we will do is we will see what's going on. This one's from yesterday. This is just awesome study, guys. This is a trigger line lesson from Paul. This is strong triggers. This is weak triggers. And this dashed line, riding, that's what we call a strong trending market. So Paul is saying, I'm good at this. I'm a chart reader. I know what I'm looking at, Mark, but let me keep taking pictures. Let me keep reinforcing lessons. Let me make sure that I never get caught out not understanding what it is I'm looking for. Joel, you came in behind him. Let's see what you did. Joel says odds favorable momentum, talks about it, right? Strong trigger, smalls above large. Zero question about what he's looking for here. Joel, you had a clear path, 100%. You take a pullback right to support, and they're outside of the triggers, right? So you're playing the odds game here, willing to take a little shot at it. And as the market continues up, you get paid. Divergence prints, and you get paid. And with this look on the large chart, I put it in the notes section, I'd be looking for that next trend trade. I'd have a limit order waiting right there at that mid band, right inside of triggers, because that's a rules-based trade, right? Pretty cool. Nicely done, Joel. And this is one of my favorite questions. Paul, I'm going to put you on the spot. And I get this a lot. I really do. And especially if you're doing this after the fact. Let's pull that up. Come on. Not a good top, which means that these areas are more likely to hold. 100% termination condition. And the question posted in the room basically said, how do I break my rules into the term? That's essentially what it says. And people ask this all the time. Mark, my rules weren't met. How do I get paid on this move right here? Hey, Mark, my rules weren't met. How do I take crappy triggers into a fib? Hey, Mark, I noticed after the fact that the market ran this far and didn't give me an entry. How do I get paid? Guys, I'm telling you right now, you don't. Right now, you don't. If you don't have a rule that is hard and fast and proven that says, I can take a trade into a termination conditions if, right? Well, then it's just not your trade. So you do exactly what Paul did. So instead of saying, I could have entered here, and I don't know why you would, you create this set of rules that says, if I have this level of momentum, if there's no divergence, if I have strong triggers, if my risk is minimal, well, then maybe I'll take this picture. And it's easy to say that this was the entry, right, Paul? But you also have resistance up here inside of triggers, which means that your stop is way the hell up here, trading directly into a termination condition. So guys, don't let what happens after your rules aren't met influence whether or not you break your rules. Rules aren't designed on one trade. Rules are not one trade. Rules are my inability to type. Rules are 1,000, 10,000 trades. And they are a pattern that has been proven. I can't talk and type. To win more than it loses. To win more than it loses, guys. And trading into termination conditions is not a pattern that wins more than it loses, especially from a weak top. So, Paul, thank you for posting that. And thank you for always being a good sport when I turn it into a lesson for the class from something that you post. But, guys, you're going to be tempted to break your rules. You're going to be tempted to do things outside of what's been proven to win. Start training yourself to do it. This is Cav. Cav takes a momentum style, which he knows isn't a home run, so he just gets paid on it. And then he's got a pullback, and he doesn't take it at the areas outside of triggers. He waits for confirmation and then gets paid at trouble. Cab, nicely done if you happen to watch the video later. Joel. Momentum is waning. Momentum. All right, Joel, are you with me? I want to go by and why I think language is important. So momentum waning, smalls below the large, larger flat, no momentum at all. How can your momentum rules say to trade right here without momentum? I'm just curious. My rules would say absolutely no trade because I've got weak triggers right at a fib. That's just my rules. And then got in inside of large triggers because small's above large. They're not. And it's right into one-to-ones. This is a tough look. This is you pretty much hoping that it goes up, which is cool. It did, right? I'm a big fan. And Joel, I'm cool with the trade. It's your trade. But if I'm going to take a momentum trade, this is just me. If I'm going to take a momentum trade, let me go back. Let me show you what my definition of momentum is. No matter what chart I'm looking at, there's only one look for me with momentum. And if I'm going to take a momentum trade, I sure as hell better have this look right here. I better have a separation between the small and large on either chart, on both charts. I better have a gap. And Joel, this isn't just for you. This is for everybody. If you're going to call a trade a momentum trade, well, then you should be able to show me momentum on every chart that you use. If you're going to call a trade a trend trade, well, then you should be able to show me the trend that you're trading, right? So I think this is where language comes into play a lot. If you say to yourself, man, I don't have that momentum, Joel, this is, I mean, it's a great read. But there's a big difference between your chart read and your rules being met. And Joel, I'm not saying you to you. I'm so impressed with the work that you've done and what you're doing. Chart reads are what the indicators are telling you. Rules are based on patterns that repeat themselves that create a statistical advantage. So your chart read says up. And let me see where that fib is, 2020 down here. Your chart read is saying, hey, my path is clear now. And your chart read says, I have room to get to the next area. And you have to define what are the rules for entry when my chart read gives me this. So great job, Joel. Good lesson there. If you're going to call it a momentum trade, maybe insist on momentum. Ron says momentum for the win. Small's outside of the large, small's outside of the large. Blue fib wasn't there because that was the chart update. That's momentum for the win, guys. That's what momentum looks like. Ron, thanks for having that picture next in line. Nicely done. Doug Elkins. I like it when you guys give me last names. I can say them both. All right. Doug, are you with me in here? Oh, dude, Joel, you're doing great, brother. All right, Doug. Small's inside a large. Looks like a 50-50. I like that you put that. But I want to cover something real quick. And guys, this is why posting in the room is so important. Because I'm a language nerd. I really am. So 50-50, Doug. Let's go through two different things. Trigger lines define momentum. So when you talk about trigger lines, you either have strong triggers or you have weak triggers. There is never a reference to 50-50 regarding momentum. It either is or it is not. Does that make sense? So the smalls are inside of the large here, which means that I have weak triggers. 50-50, I love this picture because what great lessons. 50-50, let me find it, is a reference to whether or not an area is broken or not. So 50-50 means that the small triggers have absolutely smashed through the area with momentum, and that 50-50 look, 50% through, 50% not on the trigger lines, lets me know that this has the potential to break. So in order to have a 50-50 look, what you're saying is I don't have a clear path, but it really does have the potential to break because of all that momentum. Does that make sense, everybody? Momentum either is or isn't. 50-50 means that areas have the potential to break because of the momentum. So if we back up just a little bit, what you have is weak triggers, and weak triggers are directly into a termination condition where no areas have broken. So this is where I think that using the actual verbiage of the advantages, right? And to where going through and understanding momentum, clear path, and an entry area, if I go through and I do this, this is how I'm going to re-annotate your chart. For momentum, I'm going to say no, smalls inside of large. This is weak triggers. Rule 1 not met for a high probability trend trade. And then over here, I'm going to say clear path, no. And I'm going to go through the verbiage that defines that lack of a clear path. Price reaches an area. Triggers have not broken. Termination. Rule 2 not met. And I'm gonna put a little shape on this one. And here's what gets us sometimes is, Doug, your entry is exactly where an entry belongs if you're going to go long with the rules met. So let's celebrate the victory. You do understand the entry rules 100%. You knew exactly where you were looking to take advantage. But the problem is you had a market that didn't have momentum, and you also had a market that was trading directly into a termination condition, which means in the grand scheme of things, should have never looked right for an entry because the small chart can't lead the way. Large chart has to lead the way. Does that make sense, Doug? And what this tells me is that, one, you need to make sure that you understand what momentum looks like, right? That you really have that down pat, and that you understand the idea on termination conditions. So this is where, going back to that spreadsheet a little bit, I would prefer that you go through and you find strong triggers and you find clear paths. But if that's just never going to happen, because, you know, that's work, not saying that you won't do work. There's 37 pictures of what it means to have strong triggers. And there's 15 pictures of what it means to have a clear path. But the flip side of that, there's 30 pictures of what it means to not have a clear path. So what's going to happen is you're going to commit these looks to memory, and you'll never make that mistake again. And this is what we call an avoidable loss. Does that make sense, Doug? Is that helpful, I hope? So I would take this picture. I'll drop it in the room for you. Drop it into your spreadsheet. Study it every morning to make sure that you understand these lessons. And guys, that's why I say keep it simple at first. Focus on learning momentum. And once you learn what momentum looks like, make sure that you're cool with termination conditions. And once you're cool with termination conditions, make sure that you're good on entries. And what you'll do is you'll piece those together. All right, Pete. Triggers down, separated, odds favorable momentum, but no clear path. As the large hasn't gone through the fib. Perfect read on the large chart, Pete. Good example of market turning where it shouldn't go. Nice pullback that went through the midband and the fib, the ones that weren't inside of triggers, but stopped at the large synthetic and then continued down. Properly placed stop kept you in the trade. Beautiful, Pete. And you know what's pretty cool is Andrew, Pete took the exact same trade that you took with the exact same reasons from the exact same spot. And the only difference is he understood the concept of where the market shouldn't go. Nicely done, Pete. I mean, just taking every lesson that we've talked about all week and 100% nailing it. This is where I get those proud parent feelings. Nicely done, man. Jonathan, can you discuss the divergence line that has held the price right around for 15 minutes now? There isn't one. So, Jonathan, this is what we call small swing one-to-ones. And you're assuming that the purple dot stopped the market. It's not. It's just indecision. It's buyers and sellers fighting. On the S&P, on crude oil, I don't worry about those. I worry about the yellow ones. These are taken from such small, but I'll show you exactly what they are. Small swing one-to-ones. Come on. The market went up. The market went down. At this point, your software calculated this distance right here. So if I take this arrow and slide it off of that, notice how it goes right to the purple one-to-ones? It's a 100% Fibonacci alternate. But these happen on every little blah, 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 blah. And they don't typically do a lot on such a small time frame. Fibs, yellow one-to-ones, divergence highs and lows, absolutely. And what happened is somebody with some money recognized them. And there was just a little fight, little blip right there. So if you had odds favorable, a clear path, and you got in right here, if you were trading the KISS plan from the right entry, you had $100, probably got stopped out break even, and now you're waiting for things to kind of sort themselves out. Good luck, Jonathan. It's a small swing one-to-one. And again, over here off of Glossary of Common Terms, anything that you see on a chart, you'll find probably a definition and also an example of how it comes to be, which is pretty cool. Good questions. All right, Joel. Couldn't have done it any better, Joel. Odds favorable, clear path. Let me take the pullback. Let me make money. Nice. Morgan, NASDAQ was going crazy this morning, so this was the first one that was slow enough that was more comfy to take. Triggers made it through, so the top isn't good. Guys, here's a good one. No, Jonathan, I don't. When I talk about termination conditions on the large chart, pink one-to-ones don't work their way into it. On the NASDAQ, absolutely they do. Because this is a 34, not a 13. So Morgan, here's a lesson. Not a good top, right? Because the triggers made it through, keeping it basic. And then it comes back to resistance and all the triggers remain below. I'll let this look right here change my decision about the good top. Does that make sense? Cool. So you're coming down, you have momentum. Here's your pullback. There's your area inside. You wait for the reversal bar because of divergence. I like it. You're in right there. Take it out at trouble. What retested? Oh, exactly. Absolutely. So, Morgan, do you remember yesterday when we talked about NASDAQ entries being a little different? On the 13-2 chart, if I pull back to my areas, whoops, that's not a shape, that's a call out box. Hold on. If I pull back to my areas and the small triggers are a full bar away, that says get in at the area. On the 10-2, if I get divergence, then I wait for the reversal bar. But here's the deal, Morgan. I see a lot of people dancing great to the rhythmic sounds of your techno music in the background, right? But if I don't know what they're doing or how they're doing it or why they're doing it, just because I see them doing it doesn't mean that I need to do it. I need to figure out why they're doing it. So how many of those people trading the NASDAQ did you say, oh, they're on a 10-2 and that was divergence? Because if these small triggers were up here, a reversal bar isn't going to save your bacon. So it's easy to see other people doing stuff, right? It's easy to watch other people do stuff. Make sure you understand why they're doing it. Because I see this a lot. People come in and they go, oh man, Morgan took this trade all the way down here. I need to make sure that I always take this trade down here. And what they don't realize is that Morgan is an absolute yahoo freak in nature and should have been up here at the ones and ones. And he would have had less risk and a lot more profit all the way down. Morgan wouldn't have had to trade so much. So make sure that you understand the rules that you see other people doing. And if you don't, you got to go recreate them and define them yourself. Usually I can help you with that. If you were on the 10-2, I love the reversal bar, but on the 13-2, that's great rules met to get in at the area for the NASDAQ. Either way, Morgan, it's a freaking nice trade. Really nicely done. Paul, everything says up, so you buy support and go up with it. Outstanding, Paul. Ron, everything says up and the path is clear. You get to the other side of trouble and grab a little chunk. Absolutely beautiful, Ron. And I'm stealing this picture. Stealing this picture. I had plans for it. Just two different charts, Morgan. I like the 10-2. It's a little bit faster. And the small triggers against are a little less detrimental, in my opinion. But it doesn't matter. They're both effective. You just have to have rules for it. That's all it is. And man, I know I sound like a broken record. It always goes back to rules. What are the rules? What are the rules? Doesn't matter what you do as long as you do it consistently. As long as you let the back end of the bar clear, as long as you have momentum, as long as you get in past trouble and out before trouble, this consistency has been proven to win more than it loses. So just do it every time. And I'll tell you what, Ron's made a career out of giving me heartburn. He doesn't care what anyone else is doing. He's only worried about what he can capitalize on. All right, Steve Diego. On Pete's chart with split triggers, could you take the trade higher up at the fibs, reduce risk, or wait for confirmation bar? Man, you can do whatever you want. That's the beauty of it, Steve Diego. Is you can do whatever you want. But absolutely, on Pete's trade, Did I already delete it? I already deleted it. Hold on. I'll go back to it. You want to see some? Steve, are you in here? Cool. I'm going to show you guys something. I could have gotten in at the lowest point, and if that's what my rules say, that's cool. I could have gotten in at a mid band hovering in the middle of nowhere. I could have gotten in at fibs. There's a million places that I could have gotten in. I have to define it, right? So if I have odds favorable, if everything says down, if it has the potential to break, if there's no divergence, I have to figure out what's best for me. Pete said, I'll get in at the lowest because I don't want to miss it. And I know exactly where my stop goes. And I'm okay with 15 ticks of risk. This is a 15 tick trade. Steve, you and I might say, I can't do 15 ticks on a 50-50. That doesn't feel right. I'm going to wait for a reversal bar because then my risk is established. And I know that on this chart, if I'm in at 34, it's never more than 12 ticks, right? And that's comfortable for me. 120 feels better than 150. Or you might say, you know what? I'll get in at the highest point of resistance because it's on the way to the correction point. And if I get in at 37, my stop goes at 46, 47, and it's only 10 ticks. And I could dissect this into a million ways to do it. I could also say I take this momentum, get out at trouble, re-enter at the pivot stop out, and take it down. There's so many ways to do it, Steve. When they're split, I love a confirmation bar. It makes me feel good, especially on a 50-50. And it's all about feeling good. When you're comfortable and confident going into the trade, it's easier. It's easier to manage. It's easier not to move stops arbitrarily. So on this one, strong termination, overran by a couple ticks, triggers didn't break. Triggers down and strong, spreading away. And here's the challenge. Steve, if price reaches the area and the triggers are up here, is it really a clear path? Is it really a clear path if you reach a fib and all the triggers are miles above it? And I just want to go through this for language. Everybody in the room, help me out. Anybody? Nobody? Guys, that's what we call a termination condition. That's what I teach every day. This fib is a termination condition. This fib is 100% a termination condition. And if you're going to trade into it, well, you better have a good reason. 1 second. Excuse me, had to sneeze. And I'm not knocking trades, and I'm not saying anything negative, and I'm not trying to say that what you're doing is wrong, but what I'm saying, this bar reached the fib, this bar was at the fib, and the bar you entered on was at the fib. For every one of those, your triggers were up here. Does that make sense? So if I go back to the very basic recipe, if price reaches an area, triggers above support, it's a term. Now here's the deal. I don't care if you trade into a term. So Steve, let me go to the second half. I have to point this out just because of language. Because if you don't realize that it's not a clear path, you might manage it differently. That's it. But you have a strong top. And I know in no uncertain terms that that increases the likelihood that this area breaks. You also have odds favorable momentum. And that's a big part in areas that break. You also, from the bounce, have room to go back and retest with all this momentum from a great top. And you had no divergence and very strong triggers. So this is where you have to make the decision. Do I get in here and hope it doesn't close, right? And you exited at the fib, and you exited at trouble. You identified trouble and you exited at trouble. That's awesome. I like the trade. I'm not going to lie, Steve. But the challenge is that it's not a clear path. So you have to do exactly what you did and it's perfect. But because this is a teaching room, I feel obligated to point those things out. Where was your stop? Were you saying if it gets above the large triggers, I'm out because it's probably going up to here? That's one of the things that I ask people is when your triggers are this split, it's okay to make that decision. And Steve, when you've got a strong top, these smalls are screaming, no divergence, pullback, hell yeah, same thing. Guys, I'm going to take 2 minutes. When I come back, we're going to go through the rest of the pictures. I'll be back in just a second. Oh, my Ninja Trader's gone. Dag nabbit. Back in 2 minutes, guys. Working at home has a lot of perks, but your dog knows that you work at home too, and when it wants to go out, it'll sit and ring the bell over and over and over. Ron says when you quit watching other people, they will start watching you. I like that. You do like the 10-2, Diego? Good. I don't know what was wrong with the one that I gave you. I have no idea. All right, D. Miss D. That's right, I can be taught. Let's see what happened. Odds favorable momentum. Large above the small. Space between. Rule 1 met. Clear path. This entry was at 1120, which was about right here. Okay. Entry would be the pullback, the area inside of the triggers. All right. So D, are you with me? Let's revisit rule number 2, and I want you to go through the words in your head real quick. If price reaches an area and the triggers don't break, can it be rule 2 met? No. So you are trading into a termination condition. No. Do you see the blue fib? See that big blue line right there? It's okay. So here's what happened, right? No divergence. You decide to take a shot into the fib. The only thing is exactly what Pete did earlier and what Steve was talking about. If you get in down here, these aren't inside of triggers, right? You don't have any areas inside of these triggers. And these triggers are on the other side of the areas. Do you see how these split triggers create some indecision? And how the market did go deep into those other triggers? Why did we get a bigger bounce? Probably because we came right off of a termination condition. This is where a confirmation bar pays huge dividends. Momentum is awesome. Momentum pushes the market. Momentum does everything that we could ever hope for it to do to create opportunity. But if it's momentum into an area, there may be a bounce. And if those large triggers are far away, when I'm taking chances into areas, this is where I expect that bigger bounce. I expect fibs to create bounces the same way it did here. It's the exact same look. Look at the bounce off of the fib. It didn't stop the market, but it gave it a huge shove. Somebody was waiting right here, guys. Decisions are where fights happen. Decisions are where the people that move the market are making decisions. Look how the exact same look reversed the market. Isn't that crazy? In one picture, fib creates a bounce, weak triggers gives a retracement, fib creates a bounce, fib creates a reversal, fib creates a deep retracement. Guys, the market's going to move in these fluctuations all day long. The cool thing is you have the advantage of knowing exactly where those fights are most likely to happen. Great pick, D. It's okay. It's a constant work. It's a constant study. I still haven't even come close to knowing everything that I want to know about the markets, about all the patterns and all those things. Paul, odds favorable, clear path, coming from a termination. Well, 50-50. Because of the divergence, Paul says, I'll take it at the bottom of the window or not at all. Split triggers. The only place he has a line is inside of that lower area. Guys, this is the one thing that you have. I'll tell you, on a high probability trend trade, right? When I teach the high probability trend trade, this path would be clear. And if there's no place for a fight, guys, if there's no place where I expect buyers and sellers to be duking it out, I love the top because I don't think the small crowd's going to get that far. But if there's a reason that there should be buyers and sellers angry, pissed off, waiting to duke it out here, why not insist on the absolute best lowest risk entry? Paul has turned that into an art form. And if it bounces off this fib, he'll go, not my money. I don't care. I'm not willing to risk that much. Here, Steve. All you got to do is click on the one that says momentum trade. Ta-da! And Steve, this is why that grill you built last year still has 3 screws laying on the garage floor, right? These are called instructions. I usually don't get past the first one myself. The bot answered also, awesome. Guys, everything you need, I promise, is right there. If you don't find it here, I don't teach it. All right, Joel. 50-50. No divergence. Pull back to support right at the triggers. And you take it up. Beautiful, Joel. You're killing it, dude. You are killing it. And I love your annotations. They're so simple. All right, Jonathan. Let's have some fun, brother. Let's do a couple things. I don't. I try to help you guys make good decisions when you take the wing it trades. When you post it in the room, Steve, this is one of the biggest reasons why I ask you guys, where did your stop go? When you just jump in, where's your stop loss? Right? When you just jump in, what are your exit conditions? If you guys want to get me behind the pulpit getting real preachy, show me a jump in trade and don't tell me what your rules are for exit, right? Show me a wing it trade and don't talk about where your rules for exit are. Steve, this is the momentum trade right here. If you want to see it, odds favorable momentum, small triggers break, snap back to the area. This is your momentum trade. This is how Nexgen teaches it right there. That's the one. Odds favorable on both charts. Small triggers break the area, snap back to the area, go. That's your momentum trade, everybody. All right, Jonathan. Where do termination conditions happen? I'll give you a hint. Ladies and gentlemen, termination conditions happen at the top of the most current bar on the large chart. Small and large are above resistance. Jonathan, this is 100% clear path. Does that make sense? And not just Jonathan, everybody in the room. When the small and the large break an area, that path is clear, right? Does anybody remember what the only termination condition, the only time on a small chart I will say there's a termination condition, the only time I'm willing to say rule number 2 is not met? Looking at a small chart, 3 divergences. Very good. Gold star for Steve. So there's the picture right there. 3 divergences. Rob, you get a gold star too. So, Jonathan, I see 1 divergence, right? I see 1 divergence. This is how I used to piss off my brother. This is what he would tell me. He would say, stop looking for reasons a trade will lose. And that's what happens when you create termination conditions in your head. When you say to yourself, well, the small triggers turned against me on a small chart, right? What you're doing is you're looking for reasons that a trade will lose. And what does that do? It's self-preservation. You're saying, man, I have created a fictitious head and shoulders pattern in my head, therefore I won't take the trade. Here's the reality. With this look on the large chart, that's an entry. You might have gotten stopped out. Does that make sense? If you took this entry, you might have gotten stopped out. Is it odds favorable momentum? It's not. Odds favorable momentum looks like that. Here the momentum is going away. Here the momentum is going away. Here the momentum is completely freaking gone. If you took a shot, it didn't work. But guys, keep it simple. And I guess that's what I'm trying to say here. Is don't create more. Don't say, well, this is a termination condition. If it's not taught in this room, don't create your own termination conditions. Not yet. Not until you're really good at this. Jonathan, you have been annihilating this trade. Why not that one? Why am I not seeing you capitalizing on the momentum like you have been all week? It's because you're trying to talk yourself out of stuff, and that's okay. And then there's one other thing, and guys, this is where I upset you guys a little bit. So brace yourself, Jonathan. Where is that $512 loser? Because I haven't seen a trade yet. Where's that $512 loser? Guys, this is where you guys get better. Post your losers. I'm gonna see it. You made $512 worth of losers. But here's the deal, Jonathan, is everyone's like, oh, I don't want to show that to Mark. I don't want to put that in the room. People will know that I'm not great at this, even though I'm brand new. The only thing I'm going to do when you post that loser is we're going to go back and see what we missed, right? We're going to go back and see what wasn't there. Maybe it didn't have momentum, or maybe the clear path wasn't present, or maybe you jumped in early, maybe you held too long. But if you hide losers from me, guys, I can't help you fix them. I see everything. I hired a golf coach. Did you guys know that? I hired a golf coach and I refuse to let him see me swing the clubs. And he hasn't done shit for me. Cost me $6,500. And I haven't shown him my swing yet. And for whatever reason, I can't seem to get better. Take advantage of coaching, guys. Paul said you would take that one again. Paul, I lovingly disagree on that being a trade that has a chance of winning. That is a 50-50 with two divergences, weak triggers, separation. I don't think I would take that one without a confirmation bar, Paul. Because if it's really going to break and continue up, who cares about the 6 ticks extra? Two divergences on a 50-50, man, that's a deal breaker for me. Don't want to do it. It's all the clubs, right, Steve? Ron. Hey, good morning, 10K. Congratulations, man. Guys, I've made every mistake that you'll ever make. I promise you. I have made every mistake that you guys will ever make. And here's the thing is I've given my brother every bullshit excuse that any trader could ever give their mentor. And he used to do that to me. Where are these losers that you're showing me, right? Hell, Paul's funded. He still takes losers. It's a part of it. Paul knows exactly what he's doing. He has a plan. There it is, right? 50-50, two divergences. Wait for confirmation. It might still go up. Wait for confirmation. It was close, just not quite. A couple sellers had it in them, so I like it. You guys want to know the truth? And he's not in here today. There's a guy in here that can golf well. There's probably a lot of you guys in here that can golf well. No, I try not to sugarcoat it, 10K, but I try not to be as aggressive as my brother either. I'll be real honest with you, but I'll hug you after I call you names. There's someone in this room, guys, not today, but he's a good golfer. And have you guys ever heard me say in the room, I talk about working on my golf game? Guys, I got coaching from him yesterday. Went to the driving range, fixed my problem. Never underestimate the power of a coach, guys. Michael Jordan had a coach. And Wayne Gretzky had a coach. Serena Williams had a coach. Paul, 50-50, no divergence. Enter at the area. Run over. That's a tough one. You do have a couch. That works. Whiplash time. I love it, 10K. Paul, this one I could get on board with 100%. Great bottom. Odds favorable. 50-50. Perfect entry. Didn't work. And honestly, the only thing that might have been an indicator is those small triggers on your range chart. But, man, they were still above the large. Paul, this is all day long, brother. That's the right trade. This one had a way better shot of winning than that crude oil trade had. But this is why I don't trade gold, guys. I personally think gold is this absolutely callous bitch of a market, and it doesn't follow the rules as well as I'd like it to. It's very temperamental. And we're seeing it there. Paul took the perfect trade with the perfect entry, with the best of the best. But it's still not high probability, right? And I think this is one of the things that gets us. If it's medium probability trade, guys, it's not 70% potential. And I don't know what the potential is, but it's less than 70. So we have to say to ourselves, like, you can't be surprised when a medium probability trade fails. And unless you have that percentage, how many times from a good bottom with odds favorable, no divergence, in at the area, how many times does this look win and how many times does it lose? Paul, Can we agree that this one probably wins 6 out of 10? Maybe 5 out of 10? Which means that it still has an advantage, but you're still going to lose more. I tighten my stops. That's just me. Especially if I'm using this range bar. If I'm in here, if I get that third bar down after the white bar, I'm out. I'll re-enter. I'd rather get a 7-tick hickey than a 14-tick hickey. That's just me. Does that make sense, Paul? I don't know. You're probably running your kids to class. That's pretty ugly. You think there's a fight going on in crude oil, guys? Sure looks like it for the last 2 days. So when you know that there's these fights, you know areas are holding, that they're not breaking solid, make sure you have that clear path. You have that advantage, guys. You have rule number 2. Here I have a 50-50, right? Small's below the large, large or wide. It's not coming from a good top. I'm not going to get in at this fib because I don't even have a reversal bar. This fib's outside, mid-band's kind of in between. Is it okay to say that if I'm going to take this trade, I'm going to insist on taking it from up here because my risk is the least amount? Does that make sense to everybody? If I'm going to take this trade, the only place I'm willing to take it is from the highest point of resistance inside of triggers, because with this look, I'm not willing to put $200 on the trade. Guys, I'll be back in 1 second. Didn't it? Man, but now I have odds favorable. I'm as close to a clear path as I can get. That's my lowest point of resistance. How about we hope for a pullback now, guys? What do you think? Guys, give me... Morgan says yes. I like it. Steve Diego says yes. What if it hits 8107? What if it hits that divergence low, guys, and all the triggers remain above? D says yes. So I'm in the if-then, right? If it reaches this potential termination condition before it gives me a pullback, well, then I have to cancel my order. But until that happens, guys, we're just waiting. We'll see what happens. What do you want to talk about? It's 11:18 on a Friday. We're done with pictures. All right. So right now, and I have to talk advantages, right, D? Right now I have odds favorable momentum, and I have that clear path. If I get a pullback, I'm going to enter at the lowest point of resistance inside of favorable large triggers, right? That's my first if-then. If I get a pullback, then I'll enter. My second if I hit this area and the triggers remain above, then I'm going to cancel this order. Just because I want the short, just because I know where the short should come from. Okay, it's not. It is 50-50. I've got one ticket trigger that's not through yet. You're absolutely right, Josh. With this look, by the time it gets up there, this trigger will be there if it pulls back. But you're absolutely right. Does that make sense, D? If I get a pullback, I'll enter at 81.28 because that's what my rules say to do. If it hits the termination condition first, I'm stuck like Chuck. I have to wait for areas to break, or I have to wait for the market to reverse. And Josh pointed out, it's not a clear path yet. It sure is close, but it isn't yet. So then I have to check my rules. What if this divergence is true? What if I get divergence on this pushback? Does that cancel my trade? It might for some of you, right? I'm far enough away from the top that I don't really care if it's a good top or not. That weak top, guys, this is where I expect things to go wrong. I'm 3 days past it. Let's see what happens. Let me go through here. Tooth Plumber, how we doing? Muser, you look frazzled. Steve Diego, we feeling good? You got any questions? Morgan? Donna? Where's my other Donna? Bill S., are you Donna's Bill? Cheetah, how we doing? Griffin, how you feeling? You got bamboozled? Did you get flim-flammed or just bamboozled? Sometimes you'll get speckledorfed, and that's no fun for anybody. Love it, guys. I can't wait to see it. Talk about momentum, clear path, and why you entered. Kenny, how we feeling, man? Gary E. Erla, Wayne. Zorro, remember when you used to post, Zorro? I'm assuming you're rocking it like a hurricane if you're not posting anymore. Tony the Tiger, you're great. All right, 10K, let's see what we have. There is no we, Kenny, unless you have a mouse in your pocket. 10K, everything says up with strength. You bought a pullback to the mid-band inside of favorable large triggers. You liked it so much that you added onto the trade when you got confirmation. The market goes up, no reason to stop. You get paid going into trouble, and when trouble doesn't break, you get paid. 10K, very nice. You're okay. You've been with me long enough. What are you using? Which platform for pictures? Snagit? Okay, we'll do it real quick. And then we have directly into a termination condition. Smalls on the other side. Oh, no worries. Griffin, looking forward to it. Second day on here. Man, we're going to have fun. All right, 10K with Snagit. When you take a picture, it comes into the editor, right? This is your call out button. Click and drag. Do you see how you traded directly into a termination condition right here? I have to say it for class. But there's more to it. The one-to-one bounces, it comes all the way back. The large triggers don't follow, right? So this is a termination condition, and everything's going up. Your patience is amazing. And then once everything agrees, you go long, and you get paid on the way up. 10K, everything about this is beautiful. Odds favorable, clear path, you take it to trouble. You don't take any trades on the push down because you don't have the advantage. When it reaches support, mid-band, large triggers a full bar away, you know this is a termination condition. When everything agrees, you take the long. It came from the termination condition, but you go in at 9-2. I don't know what 9-2 means. Is that your chart that you're using to enter? Hey, have a great weekend, Ron. So what you're doing is you're banking on the continuation for that second long. You wait for everything to agree and you're banking on the continuation to get you in trouble. I like it. And the annotations aren't for me, 10K. This is what I don't think people get. And I'm not saying that you don't. The annotations aren't for me. 10K, I did a pretty good job reading your chart, why you did it, where you entered, why you exited, right? I'm pretty good at this stuff at this point. The annotations are so that you guys can come back to your charts, look at them, and know exactly why you took this long so that you can do it every day. The annotations are not for me, ladies and gentlemen. The annotations are 100% for you guys. Well, it still hasn't hit the area, but these 1-to-1s printed. So now we're definitely a 50-50 trade with divergence. What do you think, guys? Do I keep the limit order or not? It's a 50-50 with divergence. Well, too late now. I'm in. Where shouldn't the market go if this one's going to work? 30, how about 35? 5 ticks beyond the top of those triggers. What do you guys think? Kenny, your plan cancels it. Steve says get out. Nope. I'm going to take it. Where's $100, guys? From 26 to 16. There's my $100. And then 06 right on the other side of trouble. But my rules aren't met, are they? I've got a 50-50 with weak triggers and divergence, not from a good top, and I can't pretend to be surprised when it hits my stop. So what do you guys think? Rules for the win, right? Rules for the win. Kenny, I like your plan. Steve Diego, I like your plan. Do you know how many people are going to take that trade and think that they deserve to win? How many people are going to take that trade and they're going to just be dumbfounded? Why did I lose the trade? Let me open up my KISS plan for 50-50s. Ooh, and let's do it this way. This will be even more fun. If you have Snagit, you can do this. You can actually take a picture of your plan. And you can take a picture of the market. In 10K, you can do this. You can stick your plan right on the picture. How cool is that? So check this out. Am I from a strong top or bottom? No. Let's make that so that you can actually see it. Do I have odds favorable momentum on the 13-2? Yes. Smalls outside of the large on the 5-1? No. Yep, you can do this on Snagit. No divergence on the 5-1? No. So guys, I have 75% of my advantages missing. Give me a Y in the room. Hey, good morning, Paul. Give me a Y in the room. If all you did was follow the most basic, simple rules, you could have avoided a loser. You could have not given away money when your advantage was gone. I give this away every day. This is the most lost trade out there, guys. But the only way that you can do this is you have to understand that it's a 50-50. And you have to understand what divergence looks like. And you have to be able to recognize that the small triggers are inside of the large triggers. And you have to say in your head, holy crap, that's not momentum. This is momentum. And then what happens, I'm going to take this one step further. I love this. This is one of my favorite things. And I still think everybody should print one of these out and build it for their desktop. Because it'll force you to speak in terms of advantages. Let me pull this over here and snap a picture of it. Knowing what you're getting into, so you know what the rules are, right? If it's a 50-50, I've already given up my clear path. So I've got 66% of my advantages left. If I have weak triggers and divergence, I've forfeited momentum. Is there any reason to believe that nothing more than an entry area is going to get me where I need to be? And that's kind of how working off of speaking in advantages creates these huge advantages for you guys. Because you're not saying, I hope it goes down. You're saying, holy shit, I've given away 66% of my advantages. The momentum isn't there. The path isn't clear. Who cares if there's an area inside of favorable large triggers? My large chart didn't say do it. Rules for the win. All right, Morgan, 2 trades, but the picture was the most recent, but you know I'm going to look at the other one too. Weak triggers, divergent, strong triggers. The expectation is the mid-band, and it almost got there. All right, odds favorable, 50-50, divergence prints, and this is NASDAQ, right? Morgan, do you remember yesterday when I said that a reversal bar in the triggers isn't enough? You need a close on the other side of the triggers? Didn't get it, did you? Those mother scratchers. Did you take this picture just so that we could revisit that lesson? Close on the correct side of triggers. It's not a reversal bar. That reversal bar hit and it just right back down. Never got to the other side of those triggers. And this is where kind of understanding your rules hurt you. And I know that you're working on these rules right now, so it's okay. You have to post it. We have to talk about it. That's what gets you. I love the setup's a good look, but because even with a clear path on NASDAQ, those triggers say you have to be patient. And Pete, 50-50 trades do not only work 70% of the time. High probability trend trades work 70 to 80% of the time typically. All right, George Val, odds favorable, clear path. You tried to go short against everything green and it didn't work. You tried to go short again against everything green, it didn't work. And you got stopped out for a great big loss. And then you tried to go long directly into fibs and you got 2 divergences into fibs. Everything changed and stopped out for a loss. And not one rule written on here, George. Not one rule. I could get on board with this long, but I'm not even sure that it's the same long. Because that's at 41. 41. So I'm trying to see where it turned from. It turned from here. This one looks great. Your areas are on the wrong side of the correction point. You get in on a reversal bar. There's a lot of troubles up there. I think management is the key. Over here, I don't know why you went short. Everything is green. Everything is up. And you were so convinced that the market had to do what you wanted it to do that you took it twice. I've never done that. Wink, wink. Done that a million times, George. Financial suicide, fighting the large chart, fighting the direction, fighting the trend, fighting the momentum. Guys, if an area is going to hold, all of this is going to roll. If an area is going to hold, these triggers will roll. If you're going short against odds favorable momentum with everything up, oh, the likelihood is so nil. And this one was just kind of right trade. Just needed a little bit of management on it. No reason to give that money back. Nice trading, George. Kenny. No. Kenny, no. Do you want me to elaborate? Just messing with you. All right. Why not? Why is it not a good top? because the trigger's broke. Let me see if I can find the picture that we did the other day for Miss Adriana. Why is this important? So, come on. Slow roll in. All right. Why is it important? Where is my picture? Here we go. So when price reaches an area, we know it's a decision-making point, right? We know that there's buyers, that there's sellers, that there's a lot that can go on right at these key areas, Kenny. So when price hits that point, if those trigger lines can't get through it, right, then the price bars aren't going to go through it, because the small triggers typically lead a little bit. Not always, but sometimes. But if price reaches a key decision-making point, and the decision made was so violent that it reversed the market, none of the triggers could go through, nothing could break at all, that's huge. That is such a big indication that the people in charge, that the sellers didn't have a snowball's chance in hell, because the buyers were locked and loaded. And the buyers, when they're waiting with this much ferocity at an area, and they push and give you that momentum, man, great things happen. Same thing here. The sellers were waiting for them. The buyers were taking profits. And man, when the sellers push off of that area and none of the triggers break, what a huge indication that that market's likely to go the other direction, that that's a great look for a top or bottom. So we call that a strong top or bottom, because it makes it and none of the triggers made it through. But if the sellers are cruising down, whoa, right? And they're pushing and they're flying and they get past and those triggers get past. Do you want me to finish this lesson first? I got you. But the triggers get by. What does that mean? That means that the sellers were able to go past that key point. That means that the buyers weren't locked and loaded right at that line, which means that this area, even though it could reverse the market, there wasn't the same commitment from the buyers to enter and there wasn't the same commitment from the sellers to exit as there was when absolutely nothing goes through. So when I see these weaknesses right at the fibs, right at the one-to-ones, a lot of times you might get that continuation up in the direction. The buyers weren't done. The sellers just messed with them. And the buyers are likely to say at a mid-band or fibs down here, or that 50-50 that's destined to fail, no, we want to go up. We're not done. We're going to keep going, right? And then, Kenny, there's a point where if this is where the buyers were so hell-bent on going up, right? Right from here. This is where they're the most ferocious. Whoops. Delete. Coming right off of that area, this is where they're still just mad and pushing. This is where 50-50s typically work the best from a strong bottom, because they're so into their move, they're not going to stop that quick. When they start getting out here, buyers drop off. There's other sellers looking to fight. And when you get all the way out here, it doesn't matter what happened down here. Does that make sense? So there's a point where I'm not near that decision-making process anymore. This 50-50 probably worked great because of the strong top, but by the time they get all the way down here, the momentum is waning. There's a shot for those buyers to come back in. Cool. Great question. So if you look at the chart that we were looking at, the market that we were looking at, where are we at? Dun, dun, dun. By the time you got all the way down here, we're so far removed from the reversal It's still just a 50-50 rules based kind of thing. But look what happened. Bad bottom. They didn't hit their number. They pushed all the way up to resistance. The smalls went through, but the large couldn't even follow. There's your gap theory. No reason to take this long, even without divergence, because it's a bad bottom, because of the gap theory. And now we're waiting to see, are the sellers going to finish the move down to the key area? Or are the buyers going to try and finish the move that they couldn't finish up here to go to the next key area? And as long as I don't have momentum or a clear path, I'm not going to get caught in that fight. Does that make sense? Up here, I wasn't. By the time we got here, no. On the 50-50 here, absolutely. I would have been concerned. But down here, it's just a 50-50 with weak triggers and divergence, and I can't even come close to getting my rules met, and my rules keep me out. Great questions. These are the little rules that kind of come and build over time. Paul Flowers. Strong top. Price reached an area. Triggers pivoted at resistance. Odds favorable momentum with weakening triggers. So it's still momentum. Pink 1-to-1s, we don't sell those as areas, but because of the strong top, this divergence, you still have a shot and you get out of trouble. Paul, you did this as well as you could. Here's your strong top. When it hits support, here's your confirmation of the strong top. So this is still pretty close to where the buyers absolutely failed, even though they came off their key. I like this trade. And you let it come up and start down rather than catching it on the way up just to make sure. Nicely done, Paul. It's a good look. Strong top, odds favorable, strong triggers. You said divergence printed and you got blown out. I do like the momentum, Paul. I even like the clear path. If I have odds favorable momentum and a clear path, is one divergence going to kill me? Probably not, right? And I see you're trading NASDAQ. It didn't get you. This divergence has precisely jack squat to do with what the problem is. Nothing. It takes 3 of these. It takes 3 of these to ruin my good time with this look. Does that make sense? You had odds favorable and a clear path. What didn't you have? Here's my synthetic trigger. Here's my large trigger. I traded from an area on the wrong side of the correction point. So is it going to stop there, Paul? Or is it going to stop there? Or is it going to stop there? I don't have any freaking idea. But let me show you something else. I bet you Morgan knows what I'm going to say. Hey, Paul, if you're going to trade NASDAQ, when it hits this area and these triggers are less than a full bar away, the smart NASDAQers, the people full of NASDAQery, wait for a close on the correct side of these small triggers. Because this is a 13-2 chart, brother. This is not a 5-1 chart. And these small triggers are the exact same small triggers that I use on a large chart in every other scenario. And there's no way you're going long right here, right? You're not going long right here. You're saying, hell no, look at the strength. So if you're going to trade the NASDAQ, your rules are going to change a little bit. Does that make sense, Paul? You have to have different rules for entry on the NASDAQ. Small chart was amazing here. Lost the audio, or I lost you with the explanation? Either one's fixable. No worries. So let me show you something. Everybody loves the NASDAQ, Paul. You're okay. You don't have to be a trader. Everybody loves the NASDAQ. Everybody wants to be a NASDAQ trader. The one thing everybody forgets, Paul, is that your small chart on a NASDAQ, your tiniest entry refinement chart on a NASDAQ is a large chart on every other market that we trade. Does that make sense? Because you have to accept that first. Then when we look at the two charts, this is a 13.2. This is not a 5.1. It's a bigger time frame. There's more power in strong triggers. There's more power in areas. So what happens, Paul? Are you trading a 13.2 or a 5.1? Or I'm sorry, 13.2 or a 10.2? 13.2. So this is for 13.2s. When I reach my area in question, Paul, if my small triggers are less than a full bar away, what does that mean? If my small triggers, let me see if I can find an example just on crude oil here. If I'm looking for a pullback and my small triggers are not below this reversal bar marker, it means that they're less than a bar away. Does that make sense? So if I'm looking for a pullback and these triggers are not below that reversal bar marker, I have to wait for a close on the correct side of the triggers because I'm not going to fight that immediate strength because they'll act as resistance. I don't know, Steve. I don't even have my 10.2 up. I don't even have NASDAQ up. I've been making videos all morning. I haven't even thought about trading today. So Paul, your large chart was beautiful. With these strong triggers, a close on the correct side, there's Morgan's trade from earlier, right? Morgan, patterns repeat themselves. There's your entry. Giddy up. But here's the other side of it, is if I pull back to my area and my small triggers are on the other side of the reversal bar marker, there's a full bar's worth of room. Think gap theory. I'm in at the area all day long. All day long, I'm taking that shot at the area because I have room to close the gap back to those large triggers. Does that make sense, Paul? Morgan, have a great day at work, man. Good job this week. I'll see you on Monday. And Steve, I'm loading up my NASDAQ right now. We can compare notes. So Paul, one of the things that you have to do is if you're going to be a NASDAQ trader, and I don't discourage anyone from being a NASDAQ trader, you got to know what you're looking for. And let's go back to your picture real quick too. If you were waiting for a close on the correct side of the triggers, never happened, huh? Saves your bacon. Paul, I blew out like 15 accounts learning this lesson for you guys. And if you go to the spreadsheet, you'll see it all day long. Smalls say wait, full bar away goes, smalls full bar away. So it kind of reinforces the lesson. So go back and look at your NASDAQ trend trades that lost when the large chart was perfect, and you'll see that a lot. You will see that a lot. Guys, excuse me 1 second. My dog is going to kill my neighbors real quick. I'll be right back. Sorry about that, guys. On the other side of my back fence, there are ducks and rabbits and bobcats and owls and everything you could ever hope for. And my dog loves to say hello as loud as she can. So this is a good one, Paul. Go through and look at the spreadsheet. Just click through all the NASDAQ things. Hopefully you'll have a pretty good aha moment with that. And guys, this is for any of you that are trading the NASDAQ. I'm telling you, it's not the same. It takes a little different approach on the entries. And if you're using the 10-2, so Steve Diego, I know you're using the 10-2, right? It's a little different on the entries too. If there's divergence from the high or from the low on your 10-2, see if I can get that to open up. If there's divergence, oh, 10K, have a good one. If divergence prints from the low on your 10-2, gotta wait for a reversal bar. Gotta wait for a reversal bar to have the best chance of success. If divergence prints from the high, gotta wait for that reversal bar to have the best chance of success. If you never get it, there's never a trade. Nice job, Cav. It's not even a tip. It should be a rule. Why is it a rule? Because it is proven to create a statistical advantage. Tips are for the horse track, right? Lucky Day is going to win in the second. Rules are for trading, guys. Rules are for trading. So, good stuff. I like it. I feel like it's been a pretty good week. What do you guys think? Anybody learn anything? No, you're not. No such thing, Paul. If you're asking questions, you're sounding smart. If you're asking questions, you're sounding smart. So let's get it in the room.